Good morning. I'm Andy Myers at Weiss Research, and this is your morning market alert for Wednesday, February 23rd. Jen Amos is off today. Stocks on Wall Street may rebound a bit after yesterday's steep sell-off, but the major markets around the world are mired in negative territory as the focus remains on the violence across the Middle East and North Africa and its impact on oil prices. Libya may be on the brink of civil war after Colonel Muammar Gaddafi refused to relinquish power. Libya holds the most oil reserves in Africa, and concerns about a disruption in supply is pushing oil prices to their highest levels in 2 years. Right now, light sweet crude is jumping above $96 a barrel, and Brent crude is near $107 a barrel in London trading. Those higher prices are weighing on global equities, as investors fear that they could derail the economic recovery. Here in the U.S., traders are awaiting a report on January existing home sales due out later this morning and reacting to another round of corporate earnings. After Tuesday's closing bell, Hewlett-Packard reported a 16% increase in net income for its fiscal first quarter. But HP's earnings outlook for the current quarter came in well below expectations. The company blamed weakness in its PC and services units for the shortfall. HP shares are falling 10% on the news after rising more than 15% so far this year. But both Citigroup and Morgan Stanley recommend buying the stock on weakness. Home improvement retailer Lowe may also move to the downside at the open, despite a largely positive earnings report. Investors are also reacting to quarterly reports from retailers Limited Brands, Saks, TJX, and Radio Shack, homebuilder Toll Brothers, and internet stock Priceline. But one of the day's biggest earnings winners may be DirecTV. The satellite television provider is jumping more than 5% in the pre-market, after it turned a loss in the fourth quarter a year ago into a profit of $618 million. And finally, another day, another potential deal in the natural resources industry. Pipeline firm Enterprise Products Partners offered $42 a share for Duncan Energy Partners, a 29% premium over its closing price on Tuesday. That's the latest from Weiss Research. I'll be back after the opening bell with all the market reaction.